The story of the United States ballooning national debt reaching a staggering $37 trillion has become one of the defining narratives of 2025, capturing the attention of economists, investors, policymakers, and the global public. This milestone is not just a number, it symbolizes decades of fiscal mismanagement, political gridlock, and a series of crises that have snowballed into a situation that is shaking confidence in America's economic leadership. For years, the United States positioned itself as the world's economic engine and the issuer of the most trusted currency, but this debt explosion has raised uncomfortable questions about the sustainability of U.S. power. It also highlights the growing influence of countries like Canada, which has not only weathered these storms with relative stability, but is increasingly becoming a safe haven for investments, trade, and resources as the U.S. struggles to get its fiscal house in order. The $37 trillion debt figure represents nearly 140% of the nation's GDP, a level unseen since the aftermath of World War II. But unlike the 1940s, when U.S. debt was driven by wartime spending followed by a manufacturing boom, today's crisis is a result of decades of tax cuts without revenue growth, mounting entitlement obligations, aggressive defense budgets, and pandemic-related spending. Each administration over the past 30 years has played a role, but the political dysfunction in Washington has made meaningful reform nearly impossible. Every attempt to rein in spending is met with fierce resistance from both parties, while interest payments on the debt have now surpassed defense spending, consuming over $1.2 trillion annually. The Federal Reserve's interest rate hikes, meant to curb inflation after the 2020's pandemic stimulus, have only made borrowing costs more painful, creating a vicious cycle where America borrows more just to pay interest on existing loans. Investors worldwide are beginning to question the long-standing assumption that U.S. Treasury bonds are risk-free. Rating agencies have issued stern warnings, and for the second time in American history, one of the major credit rating agencies downgraded U.S. debt, citing political instability and unsustainable fiscal policy. The U.S. dollar, once unrivaled, is still the world's reserve currency, but its dominance is facing unprecedented challenges. China, the European Union, and a bloc of resource-rich nations are actively exploring alternatives, from digital currencies to gold-backed trade settlements, while countries like Canada have stepped in to secure foreign investment, offering political stability, a robust legal system, and resource security. This is especially significant as global trade shifts in unpredictable ways due to U.S. tariffs, sanctions, and protectionist measures, which have alienated long-standing allies. Canada's rise as a stable economic player is an underappreciated subplot in this story. As the United States grapples with its debt crisis, foreign investors are increasingly looking north. Ottawa has aggressively pursued trade diversification, striking deals with Europe, Asia, and Latin America to ensure that Canada is not dependent on Washington's volatile policies. Canadian banks, long considered some of the safest in the world, have become an attractive option for global capital seeking refuge from U.S. uncertainty. The Bank of Canada's measured approach to monetary policy and its insistence on stricter banking regulations have earned it credibility at a time when Wall Street seems increasingly reckless. Moreover, Canada's vast natural resources, from oil and natural gas to critical minerals, have given the country leverage in global markets, with its resource exports gaining new importance as nations seek stable suppliers. Meanwhile, the political narrative in the United States is compounding the problem. The debt crisis has become a political weapon, with both parties blaming each other for runaway spending, yet neither side has the political will to make painful cuts or raise taxes. The defense budget, which has ballooned to nearly $1 trillion annually, remains politically untouchable, even as infrastructure crumbles and social programs struggle to stay afloat. Attempts to reform Social Security and Medicare are met with fierce backlash, while tax cuts for corporations and the wealthy have left the federal government chronically underfunded. This political dysfunction has eroded global confidence in Washington's ability to lead, creating a vacuum in international diplomacy that countries like Canada, Germany, and China are eager to fill. One of the most alarming aspects of the $37 trillion debt milestone is the way it limits U.S. options in times of crisis. In the past, Washington could respond to recessions, wars, or natural disasters with aggressive fiscal stimulus. Today, every dollar of new spending raises alarms in financial markets, pushing interest rates higher and weakening confidence in the dollar. This has profound implications for American influence abroad. U.S. sanctions, once one of Washington's most powerful diplomatic tools, are losing bite as nations build alternative financial systems. Countries like Brazil, India, and even US allies are experimenting with trade in their own currencies, or turning to gold as a hedge against dollar instability. Canada, while still deeply tied to the US economy, is also actively pursuing such diversification, using its resource wealth and stable financial system to position itself as a neutral, reliable partner for countries wary of American unpredictability. The economic anxiety in the United States is palpable. Inflation remains stubbornly high, eroding the purchasing power of everyday Americans, while rising interest rates have pushed mortgage and credit card rates to levels not seen in decades. The housing market is in turmoil, and millions of young Americans are effectively locked out of homeownership. The federal government's ability to invest in education, infrastructure, and innovation has been severely hampered by interest payments, which now take up a staggering portion of the budget. The US economy remains enormous, but its growth is increasingly sluggish compared to competitors, with many economists warning that the country may already be in a form of debt trap, where rising interest payments consume so much revenue that meaningful investment in growth becomes impossible. Canada's contrasting stability is striking. While Ottawa faces its own challenges, including a cooling housing market and inflationary pressures, its fiscal position is far stronger than Washington's. Canada's debt-to-GDP ratio is roughly half that of the United States, and its approach to taxation and spending has been more disciplined. The country's commitment to renewable energy, clean technology, and critical mineral development has given it leverage in emerging industries. Canada has also become a strategic LNG and oil supplier, benefiting from US trade instability and positioning itself as a reliable energy exporter to Europe and Asia. These moves are winning Canada new economic influence at a time when US leadership appears shaky. What makes this moment historic is that US economic instability is no longer seen as a temporary political hiccup, but as a structural issue that will define the coming decades. The idea that the United States can endlessly borrow without consequences is finally being challenged. Investors are demanding higher yields, the dollar's dominance is slowly eroding, and Washington's ability to dictate global economic policy is weakening. Meanwhile, Canada's steady hand is helping it attract foreign capital, strengthen its currency, and solidify its reputation as a dependable ally. Some analysts even argue that Canada's growing economic strength could give it greater diplomatic weight, particularly in energy markets and in mediating trade disputes between rival powers. In this context, the US debt crisis is more than just a fiscal story, it is reshaping geopolitics. Nations are preparing for a world where American economic supremacy is not guaranteed. China is pushing for yuan-based trade settlements, Europe is investing in energy independence, and smaller economies are building regional alliances to shield themselves from US volatility. Canada is emerging as a beneficiary of this shift, using its political stability, resource wealth, and global trade network to assert itself as a middle power. For Canadians, this represents both an opportunity and a challenge. While global investors and trading partners flock to Canada, the country must balance growth with sustainability and ensure it doesn't repeat the mistakes Washington made in pursuing endless growth through debt. Ultimately, the story of the $37 trillion debt is about trust. For decades, the United States was seen as a safe bet, a place where investors could park their money without fear. Now, that perception is fading. As Washington becomes increasingly polarized, its debt burden mounts, and its economic growth stalls, the rest of the world is hedging its bets. Canada's measured economic policies and resource-driven strategy have made it a standout at a time of global uncertainty, allowing it to quietly gain influence even as its southern neighbor faces an unprecedented financial reckoning. Whether this shift signals the beginning of the end of US economic dominance is still debated, but one thing is clear: the world is no longer willing to take American fiscal stability for granted, and that reality will shape trade, investment, and diplomacy for years to come. Let us know in the comments below. Your opinion matters, and we'd love to hear it. Don't forget to hit that like button if you enjoyed this breakdown. Subscribe for more in-depth analyses, and share this video. Until next time, stay curious and stay informed.